The following is a presentation of TFNN. Live at TFNN, here's Breakout Investing with your host, Ken Shreve.
Okay, good afternoon, everyone. Welcome to another edition of Breakout Investing with Ken Shreve, back from a long Memorial Day weekend. Happy to be in the seat again. Just a reminder, my show airs every Tuesday and Thursday from 3 to 4 p.m. Eastern Time on the TFNN Radio Network. You can also find me on Channel 1. On Tiger TV at TFNN.com. You can pick the show up on iTunes anytime. You do a search for Ken Shreve, Breakout Investing. You'll get the podcast there. You can also listen on your smartphone. I know a lot of people like to do that. Just type in tfnn.mobi. You don't need the HTTP, www. Just type in tfnn.mobi on your smartphone, and you can listen to the stream that way. Number to use to talk to me is 877-927-6648. Give me a call. As Tom likes to say, let me know what's going on in your world. We can talk individual stocks, talk about what's going on in this market. Again, 877-927-6648. Just sent out the 5th weekly update to my new newsletter at tfnn.com earlier today. My newsletter is called Ultimate Growth Stocks. It's published every Tuesday, and in between you get email buy alerts, you get email sell alerts, and you also get market updates in between each market update via email. So again, just came out with my latest weekly update earlier today. It launched 5 weeks ago. You can go right on the homepage of tfnn.com, get a free trial for 2 weeks. Just click on the newsletters tab right on the homepage. Click on investment newsletters, and you'll see Ultimate Growth Stocks right there. Let's take a look at what's going on in the market. A little less than 1 hour to go in Tuesday trading. Not too bad a performance so far. We have the Dow up about 65 points. That's 0.5% to 12,506. The NASDAQ outperforming, up almost 24 points. Almost 0.9% to 2820, and the S&P 500 up just over 7 points, slightly more than 0.5% to 1338. Let's see here. Volume will come in higher than Friday's abbreviated levels. Of course, we went into the Memorial Day weekend. NASDAQ volume on Friday totaled about 1.65 billion shares. Looks like we could come in about 10% higher than that today. NYSE volume on Friday, very light at 690 million shares, so you're getting a decent pickup in volume today. Still not overwhelming volume, but higher than Friday's abbreviated levels. Taking a look at gold, we have gold for August delivery, fell 50 cents to settle at 1536.80 an ounce. Let's take a look at the GLD, which we always like to do. The GLD is the Spider Gold Trust, and you can see that is currently trading down 0.1% to 149.49. Technically still looks fine. No technical damage at all really in the GLD. It's holding nicely above its 50-day moving average. That's all the way down at 144.78. The GLD recently trading at 149.35, up just over 0.1%. Don't have a final close on silver yet, but we can also take a look at the SLV. The technical damage done here has been considerable in recent days, looking a lot less healthy than the GLD. You see the SLV right now is up 1% to 37.45. Still trading below its 50-day moving average, an area that could turn into resistance for the SLV, so we'll watch how that plays out in coming days. But 50-day moving average for the SLV is currently at 38.31. The SLV last trading around 37.45. So we'll watch and see how that goes in coming days. And then crude oil definitely found a bid today, up 2.1% to 102.70 a barrel. Among some of the movers today, we had Goldman Sachs. Shares were recently trading around 140.24, up 1.1%. We could take a look at GS here. This has been a stock obviously that's been hit hard in recent weeks, but JP Morgan came out with a positive note on Goldman Sachs today. They actually upgraded the stock to overweight from neutral, saying that recent negative news flow around the company was over discounted. JP Morgan set a $175 price target on shares of Goldman. So you can see this stock is still in an ugly downtrend below key support levels. Goldman only up 1% today, slightly better than the broad market, to 140.16. Its 50-day moving average is up around 151.32. So the problem with buying stocks that are this far off their high and this technically damaged is, basically what you're dealing with is a lot of overhead supply. In other words, people that bought the stock on the way down, now they're sitting on a pretty substantial loss, especially those that might have bought around 170, 160. And they're going to sell as the stock tries to rally back. They're going to sell and try to break even on their investment. That's what's known as overhead supply, and it's part of the risk of dealing with a stock that's so far off its high like Goldman Sachs. It doesn't mean that it can't rally. It's just kind of a pretty serious headwind, that concept of overhead supply. We had some quite a bit of economic data earlier today. We can go over. Obviously, the market's focus is still on Greece and what's going on there. It looks to be like there's going to be some action probably over the next couple of days in terms of austerity measures taken by the country and what some of the governing bodies over there are going to do in terms of are they going to get another bailout? They've already received $157 billion in bailout funds, but a lot of talk about what's going on over there. European officials are debating what the best course of action is regarding the country's financial predicament. So we should get more color on that probably over the next 48 hours. There's an in-depth look going on at the country's finances right now, which is expected to wrap up in 24 to 48 hours. So the market will get likely some more clarity in terms of what's going to happen with Greece and another possible bailout there. On the home front, we got quite a bit of economic news today. Nothing major, but in the end, it just wasn't all that good. You had a minor report today from the S&P Case-Shiller 20-City Home Price Index. In March, that index fell 3.6%. That was worse than the expectations for a decline of 3.4%. So the story of declining prices continues. I mean, the burst of the housing bubble has really taken a long time to play out. We're going on 6 years of all the excesses being worked out in this housing market, but inventories are still high. Prices are getting hurt as a result. Meanwhile, manufacturing activity in the Chicago area weakened significantly in May. I mean, this is on the heels of quite a bit of weak manufacturing data in recent weeks. Last week it was a weaker than expected durable goods report. Before that, we had some regional manufacturing surveys, the Philly Fed, the Empire State Index, that weren't very good. Today it was the Chicago Purchasing Managers Index. That dropped to 56.6 in May after a reading in April of 67.6, so down quite a bit. The latest reading was lower than the consensus estimate for a drop to 62.5. So a drop was expected, just not as severe as it was. So not a great reading from the Chicago Purchasing Managers Index earlier today. Probably the big one was a very disappointing reading in consumer confidence. You sort of had a lackluster reading late last week with the University of Michigan. Today, the Conference Board came out with its latest reading on consumer confidence. That index fell to 60.8 from a prior reading of 66. That was much worse than expected. Economists had actually been looking for a tiny increase in consumer confidence from the Conference Board. Instead, it fell 8 to 10% from the prior reading down to 60.8. So I think this issue of consumer confidence or waning consumer confidence, especially, I was just looking at gas prices here in California over the weekend. We're still paying $4.25 for the 91 octane. The 87 is right around $4.05, something like that. So as long as oil prices stay stubbornly high, I mean, that's not going to do anything to help consumer confidence. And part of the selling that we've seen in several pockets of the retail sector could be in anticipation of a slowdown in spending going forward. We'll see how that all shakes out. Shares of Apple. Let's take a look at Apple today. Stock is finding a bid. This is another stock where its technical picture, in my opinion, is still very questionable. It's not terrible. It is showing signs of life. It gapped back above its 50-day moving average today. The news today is that CEO Steve Jobs is going to make an appearance at the company's annual developers conference last week. That's good news. Everybody is hoping that Steve Jobs is going to be able to remain healthy for some time to come, but he's going to make an appearance at the developers conference next week, where Apple is expected to unveil new versions of its iOS and Mac operating systems. So that's good news. Apple is benefiting today. Stock is up about 2.5% to 345.70. Again, it gapped back above its 50-day moving average. That's a positive sign. It's still well off its recent high, just under $365 a share. So this is another stock where I really don't think it's likely that we're going to see any sort of upside meaningful breakout in Apple in the near term. And the recent selling in the stock, I mean, there's a lot of things. The delay of the iPhone, the earthquake in Japan, supply chain disruptions. Are they going to be able to put out enough, the iPad tablet computer? Are they going to be able to meet demand for that? Or are growth prospects going to start to slow slightly in coming quarters? I think these are all challenges for Apple. I'd love to buy growth stocks like Apple for my ultimate growth stocks model portfolio. I recently took profits in Apple a few weeks ago, took some money off the table. I'd owned the stock for several months, and I just starting to think that the big money has probably been made here. I may be in the minority there, but again, if Apple's technical picture continues to improve, I will adapt, which I like to do, and I'll change my opinion. But right now, is there going to be enough institutional buying power in Apple to really elevate the stock and fuel an upside breakout? I just don't think that's likely in the near term. When it comes to the overall market, we touched on what the major indexes were doing earlier today, and I mean, the way I look at it is basically, if you can make a good argument for the market to go higher, and you can also make a good argument for the market to go lower, that's generally going to result in a market environment where it's kind of difficult to make headway in terms of buying stocks. You're going to have some great stocks that look great one day, and then all of a sudden the next day they're going to fall in heavy volume. Or what looks like a positive technical breakout taking shape is going to be met by selling pressure a day or two later, and there's just too much headwind in the market. I think that's where we're at right now. On the one hand, yes, we could see a tradable rally. The NASDAQ right now is working on 4 straight wins. We still haven't seen that follow-through that I've been looking for, a big percentage gain, 1.5%, 2%, in higher volume than the prior session. Until we see that, I think the foundation is still a bit unsettled. I mean, the market doesn't look bad here, but I would like to see that follow through. Until we see it, I think the foundation is shaky, and I think it's going to be a difficult environment for stocks to make headway, and it's one reason why I have been mostly defensive with my model portfolio in recent weeks. I have initiated a few positions here and there, but nothing fancy. Just buying technically healthy stocks, seeing if they work. We'll be right back, folks.
Tiger University's Tiger Trading Tracks is your blueprint to building a solid foundation of comprehensive trading tools. An in-depth educational program, Tiger Trading Tracks features a step-by-step process for understanding the markets and creating success strategies for your trading. The Tiger Trading Track journey will prepare you to adapt and develop a personal trading and investing strategy that will perform best for you. While you can't control the markets you trade, a Tiger Trading Tracks education will allow you to understand your personal trading and investing needs and what markets are best suited for you. Now is the time for you to travel your path to financial independence. Follow your Tiger Trading Track to trading and investment success. Go to tigeruniversity.com and click on Tiger Trading Track in the navigation bar. Choose the course that most interests you and begin your education today.
Direction Shares Leverage ETFs fuse the benefits of exchange-traded funds with the innovation you expect from Direction, providing investors with opportunities to magnify their short-term perspective, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. Direction Shares, ETFs to the power of X. To learn more about Direction Shares, click on the Direction banner on the front page of TFNN.com or call 866-476-7523. There is no guarantee that the funds will achieve their objective. The ETFs are not suitable for all investors and should be utilized only by sophisticated investors who understand short-term trading, leverage risk, consequences of seeking daily leverage investment results, and intend to actively monitor and manage their investments. An investor should consider the investment objective, risk, charges, and expenses of Direction Shares carefully before investing. The prospectus contains this and other information and can be obtained at directionshares.com. Please read the prospectus carefully before investing. Distributed by Foresight Fund Services, LLC.
Great Basin Gold is an international gold mining company with 2 producing mines in the world's most prolific gold mining areas, the Hollister Gold Mine on the Carlin Trend in Nevada and the Burnstone Gold Mine in the Wits Basin in South Africa. The Burnstone Mine is a low-cost, long-life, shallow mine that is a company builder, and the Hollister Mine is one of the world's highest-grade ore bodies being mined today. Burnstone offers a huge re-rating potential by producing in the 4th quarter, and Hollister represents a tremendous and very exciting exploration opportunity. With annual production of 165,000 ounces of gold in 2010, 260,000 in 2011, and 330,000 ounces of gold in 2012, Great Basin is poised to become a leading mid-tier gold producer. Great Basin Gold has resources of over 13 million ounces, exceptional organic growth potential at its current mines, and greenfield operations in Tanzania and Mozambique. Great Basin has strong management and a commitment to deliver exceptional value and cash flow to its shareholders while acting responsibly toward its surrounding communities. To find out more about Great Basin Gold, click on their banner on the front page of TFNN.com or check them out on the American Stock Exchange, symbol GBG.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Hi folks, this is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
Welcome back, folks, to Breakout Investing with Ken Shreve. I just wanted to take a quick look at a chart of the NASDAQ. Right now, the NASDAQ is trading in the upper half of its range today, recently up about 0.9% to 28.21. You can see the NASDAQ is sitting very close to a prior high of 28.28 right in this area that was set a week or two ago. That level could be an area of resistance where the NASDAQ could face some selling pressure. Again, we're working on 4 straight gains for the NASDAQ. For the NASDAQ. There are several compelling technical setups in this market that I mentioned earlier today in my Ultimate Growth Stocks weekly update. Some stocks that I'm watching, but I'm just being very careful about going all in too early here. I would like to see some follow-through in the market. That would be in the form of a follow-through day. Again, for those of you who have been following me in recent years, you know I spent about 12 years working at Investors Business Daily, and that follow-through day is something I learned to recognize during my years there. Typically, the best follow-through days are seen between the 4th day and the say the 10th day of a rally attempt. Today, again, is day 4 of a rally attempt for the NASDAQ. So, the percentage gains just aren't there today so far. But if it were 1.5%, 2% or higher, and volume comes in higher than the prior session, there you have your follow-through day. So we do have a lot of economic data on tap this week, culminating with the jobs report. Excuse me. Culminating with the jobs report on Friday, and that obviously is going to be a market mover. So if it's a better than expected number, I suspect the market's probably going to want to see a number north of 200,000. If it's not, it doesn't mean the market's going to fall apart, but I suspect the market's going to want to see at least job growth of 200,000. That would make it feel better about the pace of this economic recovery. So pretty good action so far in the NASDAQ over the past 4 days, but I still think the market foundation is a bit settled, which is why I've just been proceeding cautiously with my model portfolio. I realize that if I buy a growth stock that technically looks healthy in this environment, there's a good chance it can go up, and there's also a good chance that it can go down. So I like to have the odds a little better in my favor there. I think if we can get some sort of follow through, a good percentage gain sooner rather than later, I think the odds of making money in stocks would improve dramatically. So that is that. Let's take a look at some heavy volume gainers. Some stocks moving higher in some volume today. We're going to take this NASDAQ chart down here, and we'll replace it with German software firm SAP. And volume is pretty heavy in SAP today, tracking quite a bit above average. Stock is up about 3% to 62.08. I mean, this is, like many other stocks, SAP has suffered some technical damage. It fell below its 50-day moving average last week. It hasn't been obliterated. It's not that far off its recent high around 68. Just over 10% or so, but big gap up today, still trading below its 50-day moving average, and that is, again, going to be important to see. Will the buying demand be able to push the stock through its 50-day moving average? I think its technical health has improved with its gap up today, but I don't think the stock is out of the woods. No news that I could see on SAP today, but a good day. Shares up 3% to 62.08. Also want to take a look at a small cap that I have followed off and on throughout the years, a name that has good institutional support. It only has a market cap of around just over $1 billion. It's not the most liquid of stocks. It trades about 200,000 shares a day, but First Cash Financial Services, a good, solid technical breakout today. Stock is up 4.5% currently to 41.75. It cleared a pretty key area of resistance here, just under $40 a share. So you have a good breakout in good volume today. I mean, this is what a classic technical breakout looks like. No news on First Cash Financial today, but the stock is doing well. They're a pawn shop operator. They operate about 640 stores. More than 500 of them are pawn shops. They have a significant presence in Mexico. It's a NASDAQ listed company, again, with a market cap of just over $1 billion, but a really strong balance sheet here. It's not a glamorous business, but the company just continues to deliver strong bottom line and top line growth in recent quarters. In April, the company reported a 28% rise in revenue on a year-over-year basis to just under $121 million. Revenue growth has been accelerating sequentially in recent quarters. You'll hear me mention that a lot lately. I like to see accelerating growth, whether it's earnings or sales. Revenues were up 52% year-over-year to 50 cents a share. Again, that earnings report came out in April, but this is a fundamentally and technically strong stock. Return on equity very high at 21%. Good consistent record of growth, and again, good sponsorship as well. So First Cash Financial having a good day today. All right, folks, we will be right back.
Timing the Trade Charts is a complete charting software package that brings together all the tools that you need to analyze stocks using Tom O'Brien's Timing the Trade methodology in one easy-to-use application. For the low yearly rate of $449, Timing the Trade Charts automatically computes swing points, ABCs, Fibonacci retracement levels, confluence, gaps, and much more. Timing the Trade Charts is now available at tfnn.com, and you can download it and try it risk-free for 7 days. We're so confident that you'll love this new charting software package that we're offering a 30-day, no questions asked money-back guarantee. If you're not completely satisfied with this software, just let us know within 30 days and you'll get a complete refund. In order to take advantage of this great offer, log on to tfnn.com and click on the Timing the Trade Charts banner or call our office at 877-518-9190. That's 877-518-9190.
TFNN is proud to bring you the cutting edge of newsletters, Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Great Basin Gold is an international gold mining company with 2 producing mines in the world's most prolific gold mining areas, the Hollister Gold Mine on the Carlin Trend in Nevada and the Burnstone Gold Mine in the Wits Basin in South Africa. The Burnstone Mine is a low-cost, long-life, shallow mine that is a company builder, and the Hollister Mine is one of the world's highest-grade ore bodies being mined today. Burnstone offers a huge re-rating potential by producing in the 4th quarter, and Hollister represents a tremendous and very exciting exploration opportunity. With annual production of 165,000 ounces of gold in 2010, 260,000 in 2011, and 330,000 ounces of gold in 2012, Great Basin is poised to become a leading mid-tier gold producer. Great Basin Gold has resources of over 13 million ounces, exceptional organic growth potential at its current mines, and greenfield operations in Tanzania and Mozambique. Great Basin has strong management and a commitment to deliver exceptional value and cash flow to its shareholders while acting responsibly toward its surrounding communities. To find out more about Great Basin Gold, click on their banner on the front page of TFNN.com or check them out on the American Stock Exchange, symbol GBG.
TFNN introduces Tiger TV. Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, forex, futures, and more. Just go to TFNN.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a popcorn and get ready for Tiger TV, a great new service from TFNN.com.
Welcome back, folks, to Breakout Investing with Ken Shreve. Just a reminder, my show airs every Tuesday and Thursday from 3 to 4 p.m. Eastern on the TFNN radio network. My newsletter, Ultimate Growth Stocks, launched 5 weeks ago, I think it is. Late April, I launched the newsletter at TFNN.com and just sent out a weekly update earlier today. I have several stocks I'm watching for potential moves, but still hesitant to make aggressive moves with the model portfolio at this point until I see some market follow-through. So be sure to check out a trial to Ultimate Growth Stocks right on the homepage of TFNN.com. Click on the Newsletters tab and then Investment Newsletters, and you'll find Ultimate Growth Stocks right there. Also wanted to take a look at Price Smart today. This is a company that operates warehouse clubs in the U.S., Latin America, and the Caribbean. The stock company, I should say, got some positive ink over the weekend in Barron's. Stock is having a great day, actually, up about 8.5% to 46.42. I'm looking at a weekly chart here for Price Smart, and you can see a good, solid breakout several weeks ago, and the stock recently came down to its 10-week moving average. You'll hear me refer to the support level like the 10-week moving average. That's on the weekly chart. I will also refer to a 50-day moving average, which is a key support level on the daily chart. So the 50-day line and the 10-week line are generally the same. It's just that the 10-week moving average is what is seen on the weekly chart, and the 50-day moving average is what is seen on the daily chart. So looking at a weekly right now for Price Smart, you can see a good, strong technical breakout several weeks ago, and then it's very common for a stock to come down to its 10-week moving average after it breaks out from a consolidation phase, and that's what Price Smart is doing. Good, strong volume in the stock today. Again, shares are recently trading up about 8.5% to 46.42, very close to a high. Just another example of a technically very strong stock in the market right now. Remember, Yanzhou Coal Mining. This is a stock that we mentioned last Thursday. A lot of damage done to stocks in China, but Yanzhou Coal Mining is one of the last left standing over there. They're a coal producer in China, and that stock is breaking out today. Shares were recently up just over 5% to 41.38. Again, looking at a weekly chart, you can see a breakout several weeks ago. It came down to its 10-week moving average, and shares are hitting a new high today. So Yanzhou Coal Mining, there's been a lot of talk recently about the potential economic slowdown in China. Inflation is elevated there. I think the government is taking the right steps to contain inflation. So you're talking about an economy that's growing 9-10% annually. Even if you do see a slowdown, maybe it's 5, 6, 7%. I think demand for coal will remain in China. It will remain strong for the foreseeable future, and I think Yanzhou Coal Mining, YZC, on the New York Stock Exchange is a company that is poised to take advantage of that demand for coal. Let's take a look at a couple of decliners today. One of my favorite retailers. This isn't a widely known company, but let's take a look at Body here. This is a weekly chart. I'm going to actually flip to the daily. We'll take a look at Body Central. This company recently reported very strong earnings. Body Central all of a sudden isn't looking that solid technically. Shares were recently down about 2%, underperforming the market today to 24.59. I thought there was a chance for a good upside breakout in this retailer, but again, the retailers are just facing some pretty serious headwinds right now. You can see it's kind of struggling around its 50-day moving average. Anytime I see a stock consolidate gains and build a base, you typically like to see that base form well above a key support level like the 50-day moving average, and you can see that that Body is basically trading right at that support level right now. Some sellers in the stock today in heavy volume. Take a look real quickly at Avago Technologies. Pull that up. I'll tell you what, when we come back from break, we'll take a look at Avago Technologies. That stock is under pressure as well, and we'll do that in just a moment. We'll be right back, folks.
Tom O'Brien's weekly newsletter, The Gold Report, gives traders, investors, and money managers a thorough strategy for trading in the gold market. If you're an investor in gold or any of the gold mining equities, this newsletter is an essential tool that can help you become a better trader in the gold market. The Gold Report comes out every Monday with complete coverage of the entire gold market, including the XAU, HUI, the dollar, the bond, the rand, as well as more than 35 different mining equities. For the low price of $150, you will receive 13 weeks of the Gold Report, or you can order up to a full year for under $500. If you'd like to find out more about the Gold Report, log on to tfnn.com, or for more information, call our office at 877-518-9190. That's 877-518-9190.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, I just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Hi, folks. This is Tom O'Brien. My new book, The Art of Time in the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
Welcome back, folks, to Breakout Investing with Ken Shreve. Let's take a quick look at the markets with about 20 minutes to go in Tuesday's session. NASDAQ now up over 1%. This is what we want to see. I mean, this was a day that pre-market futures looked like it was pointing to a very strong open. We had early gains of 1%, and then this really bad reading in consumer confidence came out, and it looked like it was just going to turn into a very mediocre day for the market. Now we're starting to see some strengthening into the close, which is what you want to see. When you see early strength followed up by late afternoon weakness, that's generally not a good thing. But when you see strength and then weakness and then followed up by more strength into the close, that's actually a good sign. So the Dow now is down, or I should say up close to 91 points, 0.7% to 12,532. NASDAQ outperforming, up nearly 29 points, just over 1% to 2825, and the S&P 500 up 0.7%, nearly 10 points to 1340. Again, we are just 4 days into a rally attempt for the NASDAQ, for the Dow, for the S&P 500. I still think this market needs to prove itself more. If it really is intent on heading higher, I do need to see some sort of follow-through, a sign of strength by at least one index, preferably all three. That would be in the form of a 1.5% to 2% gain, where volume comes in higher than the prior session. That would be a signal that the market's trend could be ready to turn upward. A follow-through day like this, they don't work all the time. They're not 100% accurate, but you just want to be aware when one occurs, and then look for fundamentally and technically strong stocks that are poised to break out from consolidation phases. There are several of them, I think, that are prepping. Whether or not the market lets them run is another story. So I'm going to continue to watch them. Until then, I'm not going to be aggressive with new buys. I'm going to exercise my discipline and stay mostly on the sidelines and just wait for that sign of strength. I mentioned Avago Technologies. This stock is under pressure today. Shares were down about 4% to 33.55, underperforming the broad market. Avago reported earnings last week. It was really hit hard early in the week as apparently some anxiety grew about earnings, but the company showed strong bottom line and top line growth. Their chip design is going to be in the iPhone 5. Their outlook was also strong, but the stock is under quite a bit of pressure today. Some institutional selling quite a bit actually in Avago, down just over 4% to 33.55. This is actually just a perfect example of how technical breakouts have a hard time making progress in a market where the foundation is a bit unsettled. I mean, when there are bona fide signs of institutional money going to work in the market, that's when breakouts have the best chance of succeeding. But if you've got signs of distribution, some heavier volume price declines in the indexes in recent weeks, which we do have, some suspicious technical breakdowns that look like they're taking shape. That just makes it a tough environment for stocks to make headway. Avago is a good example. Several weeks ago, the stock tried to break out. It did. Volume wasn't huge, but then all of a sudden selling pressure comes into the stock, and then people that were long the stock felt good after the company reported earnings last week, and then what do you have today? A big bout of institutional selling. Stock is underperforming the market dramatically today. Let's see. There are some technically healthy stocks in the Dow that I wanted to go over. I mean, some say this is a market environment where you want to favor kind of the safer, boring stocks. I'm not sure I entirely agree with that, but I did want to take a look at some stocks in the Dow that continue to hold up pretty well. I want to start with CAT, not because it's holding up well, but just a quick technical lesson here. Here's a look at a chart of Caterpillar. Shares were up close to 1% today, pretty much in line with the broad market to 105.58. Caterpillar is a classic example of a stock that is just in a consolidation now. It broke below its 50-day moving average a couple of weeks ago. It has been rallying along with the broad market over the past 4 days. It has a 4-session winning streak going, but again, it's still below its 50-day moving average at around 108.40. I think that there's going to be some pretty significant overhead supply for this stock to work through. If the market rally continues and stocks find their footing and new highs are in store for the indexes, I'm not sure that Caterpillar is going to be a leader. It's too far off its high. I really look at it as a technically broken stock right now. Now, some of the better charts in the Dow, Boeing is a stock that is showing pretty good action. I'm going to pull up a weekly chart of Boeing. Boeing was recently, again, trading close to in line with the market. Shares were up 1.1% to 77.84. And take a look at Boeing here. This is a stock that broke out about 5 weeks ago, and again is coming down to its 10-week moving average right around 76.61, showing good action in its chart. I mean, this is a stock that still could work in this market if a new uptrend resumes. So again, shares of Boeing recently trading around 77.84, up just over 1%. Moving on to Chevron in the Dow. That is ticker CVX. And let's see what we got here. I'm going to take a look at Chevron. Shares of Chevron were recently trading around 104.33. Again, pretty close to what the Dow is doing today, up about 1.1%. What I like about Chevron, even though it's still below its 10-week moving average, Chevron does show some constructive action near the bottom of its consolidation over the past 4 weeks or so. Chevron shows some tight weekly closes. You like to see that at the bottom of a base when a stock is consolidating gains. It has started to move higher along with the broad market. The 10-week moving average at 105.17 could be resistance, but this is a stock where I think it's a good candidate for it to continue to work on the right side of its base, and it could try to retest its prior high of 110 in the not too distant future. So again, shares of Chevron recently trading around 104.33. Still has work to do to complete a base, but an interesting performer in the Dow. And finally, wanted to take a look at Intel. I'm going to pull up a weekly chart of Intel, and shares of Intel recently up 0.8% to 22.38. The news around Intel today, they're going to release a type of thinner laptop that they're calling an Ultrabook to better compete with all the tablet computers that are hitting the marketplace recently. Shares of Intel not looking too bad. The stock recently staged a nice technical breakout. Another example of a stock that has not broken down yet. It's still holding above its 10-week moving average around 21.87. Shares of Intel recently trading around 22.38. So this is an example of a stock that could find support. If the NASDAQ can continue higher, you could get a nice bounce off the 10-week moving average for Intel. We'll be right back, folks.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make. Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
TFNN introduces Tiger TV. Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, forex, futures, and more. Just go to TFNN.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a popcorn and get ready for Tiger TV, a great new service from TFNN.com. This segment is brought to you by Vista Gold. For more information, just click the Vista Gold banner on the front page of TFNN.com.
Welcome back, folks. Quick check on the markets with about 5 minutes to go in Tuesday's session. More strength. We're kind of strengthening into the close here. It looks like we're getting a little pickup in volume, too. Of course, volume on the New York Stock Exchange and NASDAQ on Friday was pretty light due to the pre-holiday levels. But, again, with about 5 minutes to go today, the Dow is now up 117 points. Close to 1%, call it 0.95% to 12,558. The NASDAQ up 35 points, 1.3% to 2832, and the S&P 500 up close to 1%. That's almost 13 points to 1343. Again, volume was light Friday, so it's not going to be hard for volume to come in higher than Friday's levels, but we are seeing a nice pickup in volume here. NASDAQ volume on pace to be, let's call it 10 to 15% higher than Friday's levels. Even heavier on the New York Stock Exchange. Looks like volume there could come in close to 30% above Friday's very light levels of what did I say? I think that was about 690 million shares traded hands on the New York Stock Exchange Friday. So very light volume. Looks like NYSE volume is going to be close to 30% higher than Friday's levels. So that is what we have going on. I wanted to talk in the few minutes that we have remaining about the IPO market. Only one IPO scheduled to price this week, a little company called Sabre Industries that's going to trade under the ticker SABR. Company plans to raise $91 million by offering 7 million shares at a price range between $12 and $14 a share. The company provides towers and shelters for wireless infrastructure and electric transmission. At the midpoint of the proposed range, assuming it goes public at $13 a share, that will give it a market value of about $170 million thereabouts. Company did $264 million in sales over the past 12 months. A couple of successful IPOs recently are under pressure today. Shares of LinkedIn were recently down just over 6% to $82.75, and yes, someone did buy this stock at a high of $122.70, unfortunately. So LinkedIn under pressure today, now trading around $82.75, still well above its offering price of $45 a share. And then Russian search firm Yandex recently trading around $32.82, down close to 5%. Yandex is still trading well above its offering price of $25 a share. Coming up after the close, we've got earnings from Phillips Van Heusen. I have a daily chart of Phillips Van Heusen up right now. This is a stock that is definitely acting squirrely ahead of its earnings report. Shares were down 0.9%, close to 1% today to $65.97. Stock recently hit a high of just over $71 a share, has been under quite a bit of selling pressure, recently traveled down to its 200-day moving average, is trying to rally back above the 50-day line, but is trading near a session low today ahead of its earnings report. After the close, again, shares down 0.9% to $65.97. It's likely we're going to hear a story from Phillips Van Heusen. They're an apparel maker, of course, and likely going to hear something about margins going forward and higher input costs. That was something that Ralph Lauren, shares of Ralph Lauren got hammered recently due to margin pressures. We could see that at Phillips Van Heusen as well. Also coming up tomorrow, earnings from Dollar General. This is a very strong performing stock. EPS expected to be up 19% to 50 cents a share. Sales up 10% to $3.42 billion. We can take a look at Dollar General ahead of its earnings report. This stock has been a strong performer. Whether or not a lot of good news has been priced into the stock remains to be seen. Shares were up 0.9% today to $34.97. We'll watch closely to hear what Dollar General has to say tomorrow. Folks, thanks very much for listening. Don't forget to check out a free trial to Ultimate Growth Stocks on the homepage of TFNN.com. I will be back on Thursday, noon to 3 to 4 p.m. Eastern. Have a great afternoon, folks, and we'll talk to you on Thursday.
Great Basin.